traders, how are you? Vladimir here from Home Trader Club, and in this video I would like to explain a very common, popular, maybe among retail traders trading method, but I want to give my very valuable, important tips on how to do that properly, and mainly what not to do. Okay, because it's pretty obvious and clear, and once you spot the opportunity, you will know what to do right. But it's important also to know what not to do and what to avoid. So I will be talking about two very popular technical tools among retail traders. That will be the Bollinger Band indicator and the engulfing candle pattern. Okay, but the combination between them could be in times magical. Maybe magical is a strong word, but what I mean to say by that is once you spot the opportunity, especially on the higher time frames, the lower time frames you can get out of that could lead to absolutely amazing opportunities. So that's exactly what I will be covering in this video. So here we are. In this example, it will be the pound kiwi. The first example I would like to show with you here, to show for you. But before that, I would like to take the opportunity and to give a big shout out and thanks to Mugan Markets broker I trade with for supporting me, my community, my channel, and for allowing me to offer my audience and my follower the very special deal I have with them. You can learn everything about Mugan Markets and the special deal in the description below this video. Okay, if you have any questions, don't hesitate to ask in the comment section below. So first of all, the Bollinger Bands. You probably know that, right? Bollinger Bands is so used indicator. So many traders use it in various ways and combinations. Some use that as is Bollinger Bands. Some use that with support resistances, trend lines. Some use it with divergences, like myself. Some use it with candle patterns, like I'll be showing in this very video, and you name it. It could be with anything else as well. But here is the method that, technically speaking, is considered one of the most reliable. First of all, the Bollinger Band itself. Okay, so what you need to know about the Bollinger Band, the price tends to move from band to band. Okay, so in most of the times, what we will get is something like that, from one band to the other band, etc., etc., etc. There will be times where the market is leaving the comfort zone and going for a ride. Like in that case, Bollingers are broken and we are going all the way, riding the lower band, or like here, the upper band. Okay, there will be times where like the Bollinger Bands levels will be duplicated prior the pullbacks. But in majority of time, what the Bollinger Band represents is 20 moving average with positive and negative deviations, creating some sort of an, I would say, barriers, okay, like an envelope. It's covering the range and not within the normal deviation. And most of the time, the market is moving from one band to another with slight deviations and so on and so on. Okay, so with that in mind, understanding that in majority of time the market tends to move from band to band, comes the logic that combines the candle patterns. In that case, I'll be presenting engulfing. It could be with anything else, but I'll be showing engulfing. With the logic of that, once we are out of the comfort zone, and there are conditions of reversal pattern and levels and so on, which I'll be explaining in a minute. And or if we are riding a trend and bouncing off the middle within the trend, there could be great opportunities for trade. Okay, so there will be two things I will be presenting here. The first one would be engulfing pattern on the reversal side, and then I'll be talking about the trend riding or trend continuation with some twist that I have here with my Bollinger. So what I want to explain here before I continue, what you see on this chart is a use of my indicators. Okay, engulfing in that case, that's based on my candle pattern indicators, and that's the Bollinger Bands pointing out important levels for me, and I'll be also showing duplication levels, which I will explain later. It's all for the comfort of my trading. These are the indicators I use with, and you can find them and get them directly from my marketplace. So this is just so if you will have a question on what are these indicators I have on the chart, so I want to answer this question before you ask. These indicators I use, and they are available in my marketplace. Now here is the very important first thing. For Bollinger Bands reversal, what we want is when the price going to the lower band, we want the price to go below the band and retrace above the band, and when we are going on the opposite way, going above on the upper band and retrace to below the band. Okay, these are the Bollinger Bands as you can see them on the chart. Okay, so here is a classical example, first example. Then we will see more examples like here, and then on the trend conditions like here. Okay, there will be also examples that show here what not to do, of course, but you can see several very, very strong. Here we are again. Okay, engulfing on the very bottom. Okay, reversal conditions. So let's start with the first one. This is the place where it happens. I will enlarge the charts a little bit for you. Okay, so take a look what happens here. The price moves from the lower band to the upper band. No argument about that, right? Attempts to go above that and fails. The price retraces back, and the engulfing is formed closing below the Bollinger Band. So not just it closes below the Bollinger Band, it also, of course, closes and engulfs the whole bullish candle pattern. So at that moment, pay attention that I am here on a weekly chart. Okay, that's long term, and I love watching that on higher time frames, like weekly, daily, minimum 4-hour chart, and then potentially go to do some day trading. But weekly and daily are my personal favorite. The reason is every technical element, method would be more reliable with extra creditability on higher time frames rather than the lower time frames. The reason is higher time frames come with a lot of money flow, big money flow. If you think about it, the money flow that has to be creating these swings, it's a lot of money, unlike the 15 minutes, which is just, the money that goes during the day. That's significant flows of money, how the money transfers from one hand to another. So going back here, so once we spot that condition, okay, upper band with bearish engulfing or lower band with bullish engulfing, which would be in that case here. So what we can do in that place is basically sort of a signal for us, like sell signal. Many traders treat that as is and go for a sell. The first initial target usually for them would be the opposite band, because as we discussed before, the logic of the Bollinger Bands is that the market is moving from one band to another. But for more advanced, I would suggest to consider and adding the next important swings, because the market structure is very interesting, but when the market creates swing highs or swing lows, eventually it goes and retests the swings. Okay, So stuff like that. So when you have that in mind, and here, take a look what happens here. We have swing high, swing low, swing high, swing low, swing high, right? All that happens within some sort of a range. There's a big range here, as you can see. So if we take that into, the conclusion, okay, so that's swings, sequence of swings making lower highs, lower lows. And according to the big range, we have this important swing low that we could retest, and then this swing low which we could retest, and you can go and ride big trends, understanding that as long as there are no opposite conditions, you would be able to ride the full movement and enjoy from the full potential profits. Okay, so this is the first thing, as is. The next thing is to go to 1 or 2 lower time frames, and that's something that I personally like to do, and to wait for reversal signs, or I should say like bouncing signs, like going down, bounce to the opposite band, and then join the trend. Okay, well, you can see on a daily chart nothing happens here. And if we take a look on the 4-hour chart, as I said, 1 or 2 lower time frames. So here we are, and after the weekly formed, let me just show it once again. This is the engulfing. So right, the next candle is this is where we start looking for. Okay, so right from this moment, any retraces we get to the opposite band, like in that case, close to the opposite band, here to the opposite band, here to the opposite band, and here we can start looking for ways to go and to ride with the weekly trend. Okay, so once again, let me be very clean here. Okay, so we saw the level. We discussed about the Bollinger Band itself, right? So this is the important first low. That's the important second low, right? As long as the trend continues. And this is the first low, right? But the second low is much lower than that. And you can see that as long as the trend continues, and how do we know the trend continues? Of course, if the price continues to make the lower highs, lower lows without changing the trend. So in that case, we got the pullback close to the Bollinger Band, in that case to the upper Bollinger Band, in that case to the upper Bollinger Band, and each of them, take a look what happens here. Bearish engulfing, with the same logic. We are with the weekly trend ride, and the engulfing was the Bollinger Band pointing to the downside, and now on the lower time frame, as long as there are no reversal signs, right? The first target zone reached here, the next target zone is much further. And these opportunities are golden. They allow you to join and go with the trend. Okay? Going back here, engulfing. Going back here, we don't have any engulfings, but we can see that the market holds this resistance significantly. And every time it touches the Bollinger Band, it pushes it lower, all the way until the next target zone reached. And as I mentioned before, as long as the trend does not change, we are good to go. And only here we start to see that this false breakout, and then the highs are broken. This is where we potentially need to be careful. All this right, as long as there were no reversal signs, that's opportunities for us to look for even the same technique. Of course, you can apply different techniques here, but even the same technique. Pull back to the lower, to the opposite band, create an engulfing or other candle patterns, and look to play from there, joining the higher time. Okay, so this was the first example which I wanted to show. Now take a look on the next one, for example. Okay, here we go, another engulfing. Okay, I'm not sure I will be able to get the 4-hour chart data there. No, I don't have this data there. But okay, it doesn't matter. You will understand the logic as you will see. Okay, so same thing exactly. We got an engulfing right at the top. So the question here is, okay, what do we do, right? So according to what I explained before, when we go with the trend, or if we are trading from important resistance, trend line, supply zone, like in that case, take a look, a lot of sellers here. Okay, look at the spikes, sellers. Okay, it's all very, very, very strong zone, and it's holding. Previously broken support that now becomes a resistance. It's all holding. So if we get this call on the upper Bollinger Band with an engulfing, hence for a reversal, right? As I explained before, the first and the instant target would be the opposite band, but take into consideration the next important swings. And the next important swings are here. That allows you to join and ride the trend as it goes. You can see here we will get a pullback. Here we will get a pullback that will allow us to go and to join the ride. I cannot show the 4-hour chart. I don't have this data available here, but you can see these little pullbacks will provide the opportunity. So this is the first method that traders are using. Okay, you can see another one here, right, with the beautiful reversal signs. Take a look. Classical trending conditions, fake low, false breakout, right? You can see here reversal signs, market making lower lows, indicator making higher lows. This is a positive or bullish divergence conditions. Absolutely classic. Okay, beautiful signs, and at least we are going to the opposite band, but then pay attention to the important swings. Pay attention to the important swings, support, resistances, demand, supply areas on the way. All they are play significant role on your ability to go and to ride these reversal signs. Okay, so what you do not want to see and to do, like here, this is a bullish engulfing. Bullish engulfing on the upper band would not make anything for you. You want it from the lower band on key important level. Okay, like here, it will give us nothing. We don't have a trend. Okay, or here at the middle of nowhere, or here. Okay, so you want it to be specific on upper or lower band. The next method I want to cover and talk about here is how to join an ongoing trend. And for that, I would be using my indicator of the Bollinger Bands, and I'll be presenting how I use dynamic based on Bollinger Band ranges, support and resistances. So in that case, from when the market bounces from the lower band through the upper band and breaks through this breakout, as you can see, there is no instant pullback. That's a strong breakout. So I take this area and I put Bollinger Band duplication. Okay. Again, this is my indicator here. As you can see, it helps me to spot this level. So it's like a cheat sheet for me, right? But this is a key supportive area. As long as this area did not reach, for me, pullbacks should be good opportunity for a buy. Now take a look here. This is the trick I want to show. The Bollinger Bands, the upper Bollinger Bands pointing up. The lower Bollinger Bands after twisting pointing up. The swing highs on the chart pointing up. It's a bullish trend here. So when we bounce back to the middle of the Bollingers, look what happens with the middle point, right? The 20 moving average. It's bullish. It's pointing up. It's not flat like we saw here, for example. Take a look. All that is flat. You see? We cannot do anything with it. In that case, everything is up. The upper band, the lower band, the middle band are all pointing up. And we got a bullish engulfing here. Now take a look. This is a dynamic resistance on the Bollinger Band. So for me, it means as long as my middle zone holds here with the engulfing, any pullback, if happens to be on the lower time frames, would allow opportunity to join and buy. So this was the same logic I showed you before, right? This is the candle. So right after the next candle, starting from the next candle, we are after buys on one or two lower time frames. But this is the one lower time frame. After that, it gets us to here. right? The opposite band. Here and here, we can start looking for the buy opportunities. Or if it's 2 lower time frames, which is acceptable. Again, it could be 1 or 2 lower time frames, okay? And this is the line of the weekly chart we saw before. And as long as the target zone we saw from the weekly was not reached, this is the target zone. Bollinger Band, let me show you once again. Bollinger Band duplication, let me put it here, the line, okay? So as long as the target zone was not reached, this is the target zone, okay? We can, and this is the weekly engulfing. We can buy these places, look to buy these places, look to buy these places, look to buy these places. Every time the market goes to the opposite band, and as long as the low from the weekly engulfing holds, every retest of the lower band with the specific candle pattern, right? We have the engulfing would be spotted here. We have, let me show you where. Let me show you also partial, because right now it's also only full engulfing. Let me show you also partial engulfing. Okay, so you will see more candle patterns here, okay? So, not here, so here, partial engulfing, okay? This place. What else do we have on the bottom? This place, okay? And no, this is the bearish, so we don't use it. Okay, so we are looking to join the weekly trend again with the same technique. Of course, you can apply here different techniques. Okay, for those who love to go with trendline breakouts or trend flips. So, for example, trendline breakout, okay, or trend change when you got the lower highs, lower lows, and the trend changes. Okay, or any other like support resistances or Fibonacci, any techniques you have here. Keep in mind, the main trigger here is the weekly chart. And then on the daily and the 4-hour, you can look to join that ongoing trend as long as this target zone that we saw from the weekly Bollinger Band duplication was not reached. As soon as it is reached, consider that as a game over. Because it's not just duplication level, right? It's also, remember what I showed before, right? Supply areas, areas of sellers. And this area now starts to be significant, okay? So once again, you spot the opportunity on the higher time frame and then on the lower time frames. As long as there are no reversal signs, you are joining the trend here. It's not just the engulfing. It's the fact that we have higher highs, higher lows, Bollinger Band pointing up, upper and lower, and the middle, and you are bouncing off the middle Bollinger Band. It's a very strong technical conditions to join that trend. Okay? This is another example which I wanted to show you here. And as I mentioned before, I love to use it with the weekly and the daily charts. Okay? But again, not pure engulfing on Bollinger. I love to combine it, of course, with levels to maximize and optimize my opportunities. So in that case, this is the euro-dollar daily chart. Okay? Before that, I was showing the weekly chart. Here's an example of a daily chart. Same logic. Okay, when we are on the lower band and we spot the reversal signs, we can start looking for these buys here and here. Here we are on trending conditions, right? After the trend changed, there was a bearish trend. Take a look what happens here. Bearish trend breaks the trend line, flips the trend, making higher highs, higher lows, pulls back to the middle, right? And again, like I showed in the example before, upper Bollinger Band, middle Bollinger Band, and afterwards the lower Bollinger Bands are all pointing up. So as long as that right, and there are no reversal signs, we are good to buy these pullbacks and join with the trend. Okay, so as you can see on this example here, both techniques to buy the reversals and with the trend would be applied the same way, exactly like explained before. Okay, so for example here, after this engulfing, we can go to, and of course, as long as we don't have a price going below this low and closing below the low, right? We can go to 1 or 2 lower time frames and start looking for these buys. Okay, so here we are. This is the first place, right? Any pullback to the opposite band with positive engulfings, like engulfing here, right, would provide you the opportunity to go and to join what already is created by the daily chart, as long as this daily low holds and we don't have the price breaking below that and closing below that to invalidate the low. Okay, same exactly here. After this engulfing, okay, we are in an ongoing trend, no broken trends or anything like that. Go to 1 or 2 lower time frames and look to join this ongoing trend. Let me show you here. Okay, so any pullback, again, I would not consider that as a pullback because you can see it's just flat movement. It's not enough to get a correction and start looking for the buys, right? But deeper pullbacks like here, like further on, okay, deeper pullbacks, all these could be actually opportunities to start looking for the ways to join what we saw on the daily chart in that case. And same with the trend before. Same logic, absolutely. Spotting the opportunity on a higher time frame, and as long as the pattern holds, very important, because don't get me wrong, pattern is pattern. It's not any sort of a magical call, boom, guaranteed, trade, bam, paid. No, of course, if the market doesn't agree, right, we can go reverse and that invalidates the candle pattern. But the range of the Bollingers, the patterns, the significance of broken resistances, right, that become support and hold, all that plays significant role in your trading decisions. And what I wanted to present you here is how you can combine the very basic concept of pure Bollinger Band ranges and the logic that the price moves from range to range with the pattern and look to join on the lower time frames. Again, on the lower time frame, you can apply any of your techniques you are using for trading. Okay, but the basic one is to do the same logic of the candle pattern with the Bollinger Bands in the direction you are riding. As long as the higher time frame where you spot the Bollinger Bands, the pattern holds itself, you are good to go. As long as there are no opposite signs against you. And when you are riding the trend, pay attention to significant levels. Okay, what do I mean by that? Like from this engulfing, of course, you can aim the opposite band, yes, but it might be small. Then you have significant highs on the go, right? Here and here. When you are in this place, this would be significant high for you, right? Broken resistance, broken support becomes a resistance. So this would be your potential target zone. From here, this would be your potential target zone. Okay? It's very important to remember indicators are great, but indicators are indicators. They are indicating. Okay? You want optimized odds and probabilities for your trade. And you earn that by combining your levels together, the price action together with the indications. So this is the concept I wanted to present you here based on the Bollinger Bands and the engulfing. So that would be it for this video, and thank you very much for your time watching this video. I hope, as always, you find value in it. If you do, personal request, YouTube algorithm and all that, please hit this like button. Few words in the comment section would be a great help and great support me, my channel, my team, and our work we put for you. If you are new to this channel, please consider to subscribe to the channel with the subscribe button below this video so you can enjoy all the content we upload for you. And also, I would like to invite you to our trading family, the Home Trader Club, where you will get your access to our full trading courses, which you would be able, once you are in, you will be able to find them here. Beginners, advanced, full courses where you will enjoy all our real-time education and real-time trading opportunities spotted for you, shared with you with a full detailed explanation, where you will get your access to our trading community, myself, my team, and so much more. So join us with the link below this video in the description. Once again, thank you for your time watching this video. I hope you find value in it, and best to you and yours. I wish you good trading. And if you have any questions, please don't hesitate to ask in the comment section. I'll be more than happy to answer and to help. Again, thanks for your time. See you soon with more. Bye for now.